the Democratic Republic of Congo is a bustling city that is home to more than 17 million people. Situated on the southern banks of River Congo to the west of the country, this metropolis is the natural hub for trade among its 9 neighbors and outward to the west, south, north and eastern Africa. The Equity Group Holdings' entry to this vast country is a scale-up of its operations on a continent that is in urgent need for economic freedom through inter-country trade and economic cooperation.
As we witness our local enterprises coming together in the spirit of one Africa, one people, our forefathers fought to secure not only political freedom, but also the economic freedom of our people. The political freedom is secure, economic liberation is therefore the task of our time.
Et nous pensons que le dynamisme qu'imprime aujourd'hui le secteur bancaire au Kenya va rejoindre notre secteur ici. Beaucoup de projets que nous sommes en train de mettre en œuvre dans notre système bancaire, que ce soit sur le plan réglementaire, que ce soit sur le plan de digitalisation. Donc nous sommes là en train de faire des essais sur la carte bancaire nationale qu'on a baptisée Mosolo. Mosolo signifie argent en lingala.
The model of an efficient, audacious, innovative and technologically driven bank is clearly the key to expedited financial access in the region that falls astride the mighty Congo River and the Great Lakes region, symbolized by navigable water bodies including Lake Victoria, the second largest lake on earth.
The Equity Group model is a homegrown model. It's developed from the insights and the inspiration of the African people. It speaks to their needs, it speaks to their culture, and it speaks to the way the society is organized. It's the most inclusive banking model on earth, allowing everybody to be onboarded, ensuring nobody is left behind. It's purpose-driven, and the purpose is the socio-economic transformation of the African continent.
Equity BCDC is now the second largest bank in DRC with a balance sheet of more than $3 billion, which is equivalent to 300 billion shillings.
Today is a clear reminder and testimony of intra-Africa trade and cooperation. And on my part, I reaffirm the commitment of my administration to drive closer economic and social relations in both the region and across the continent.
With over 3,000 bank agents mainly in the urban centers and inaccessible, far-flung rural towns, Equity BCDC is set to scale up the number through the shared prosperity model and using mobile and online banking.
We are becoming one bank that cover all segments of the economy, that leave no one out. Talking about individuals, we talk about those micro, small, middle enterprise, which are generally underserved. Our objective is to maintain that segment above 60% of our lending business.
Equity BCDC is poised to embrace the vibrant micro, small and medium enterprises, the hospitality industry, mining and farming in many parts of the country.
Operating in the DRC as Equity BCDC, it gives us opportunity for cross-border trade to facilitate, for linking the Indian Ocean with the Atlantic Oceans. So we are in a very good position to support that. Having our site and the operations of the group, which has its operation in other countries.
In Kinshasa, a leading entrepreneur, Gervais Milondo, has ventured into the hospitality industry through investment in Lyon Hotel at the heart of the city.
C'est une joie d'avoir une banque comme Equity. Lyon a commencé avec 6 chambres et actuellement Lyon est arrivé à 108 chambres. C'est l'accompagnement d'Equity en permanence. Chaque fois que je suis dans le besoin, je peux appeler le manager directement et ils sont là pour accompagner.
bigger bank at his disposal, Gervais is looking to take a facility to establish a bigger hotel to meet the insatiable demand for accommodation in the city.
Equity a accompagné le business de Léon jusqu'à faire un mall, actuellement qu'on appelle Bisou Bisou Mall, un mall exotique où nous avons actuellement 200 locataires.
DRC is known for extraction industry, that is mining. It has many mineral deposits, one of which is copper.
We work quite a bit with the Equity Group in DRC and outside. We have had 3 years ago a project called Kisanfu Mining, where we wanted to build a cobalt and a copper plant refinery, and we were quite tight on timeline as we needed to complete within 12 months.
Kinshasa, the capital of the Democratic Republic of Congo, is a bustling city that is home to more than 17 million people. Situated on the southern banks of
Now, you can always be sure it's Equity calling. When we call you, we will use only this number, 0763 000 000. Always be sure it is Equity calling. The selection of Wings to Fly and Elimu scholarships across Kenya started in earnest in early June. The 2021 selection of the Wings to Fly scholarship program and Elimu Scholars by Equity Group Foundation and partners involved long interview days by Community Scholars Selection Boards, CSSBs, and Community Scholars Advisory Committees, CSAC. Scholars who sat the Kenya Certificate of Primary Education (KCPE) exams and scored over 350 marks were eligible to apply for Wings to Fly scholarships, while those who managed 280 marks and above were encouraged to seek Elimu scholarships.
I came to see what Dr. James Mwengi's team is doing, a very well-composed team. There are 9,000 scholarships. Through the wisdom of the President, we have decided to give 3,000 of them to Kenyan children in slums and informal settlements.
What you do is the most important process in this scholarship. The fact that you do this as pro bono, it's not for pay, it's a give back service to community, is what makes this program powerful. That everybody gives their own time, everybody gives their own resources to make it happen.
The MasterCard Foundation and Equity are longtime partners. We started our partnership on the Wings to Fly program. So it was a new idea, how to enable gifted but disadvantaged students to access education that will allow them the pathway to work fulfillment.
Elimu Scholarship is really boosting the lives and education of our pupils, especially those children who come from very needy backgrounds.
As human beings, we basically have to assist each other more so in terms of challenges and problems. And we find that this program of the Equity Bank, the Wings to Fly, has actually done that.
In the remote village of Kanganga in Mbeere South, Caroline Wanja is getting ready for the day. Although she braces to move about, Wanja has not let this physical challenge stop her from pursuing her life's dreams and ambitions.
I scored 215 KCP. I've been called to Furaha Girls High School in Chuka. I am the third born in this family.
The death of Wanja's father left her mother the responsibility of fending for the family alone.
Some of the challenges that I used to face in school is that I was sent home for food, that is 4 tins of maize and 2 tins of beans, which we used to eat for lunch.
At 1 year old, Brian Ocheng survived a fire that burnt their house and affected one of his hands. Despite his disability, Brian does not see himself as different from other people. Brian lives with his father and 4 siblings in a one-roomed tin house in Mradi village in Mathare 4A slum.
I was told that when my mother went out to look for supper, I was left sleeping. There was a burning candle. When I was about to climb down, the fire catch my sweater, which burnt me my left hand and my eyes.
Although Brian remained home 2 months to sit in KCPE, he managed to score 355 marks.
People do look me like I'm different, but me, I see myself as I am like them because I can write, I can read, and I can see.
A few kilometers from Lodwar in northeastern Kenya lives 16-year-old Faith Lore. Faith is an orphan, having lost her mother at a tender age. She lives with her aged grandmother. Faith's education at Komponi Primary School was hampered by many challenges. She, however, endured to score 307 marks in the KCPE exams and gain admission to Lodwar Girls High School.
I was living with my mother alone. They got separated with my father, but I don't know where my father goes. And my mother died in 2013. So I must work hard so that I can get help to continue with my studies.
Kama yeye nasoma mzuri, nachukua namba mzuri, takuja kufanyia kazi serikali pamoja na Equity.
Bright Mwambura is a brilliant boy from Kiwandani in Kilifi town. The firstborn child in a family of 8 sat his KCPE 3 days after his mother passed away. Earlier, his father had died in a fall from a coconut tree. The 8 children live under the care of a widowed aunt who has 5 children of her own.
Naishi Kiwandani kwa plot yenye tuliachwa na wazazi wetu, na walivyotuacha walituacha kwa nyumba yenye hata saa hii ni kama imeanguka nusu.
Kazi yangu mimi ni ya kuchemsha mahindi na kuzungusha. Nikipata nigawanye mara mbili, nigawanye chakula huku kiliwe na huku kina bread pia niape chakula wale.
Kisher Morwak is located north of the Masai Mara Game Reserve. The Narok West CSSB members are looking for the home of Lato Mereru, who scored an impressive 397 marks in her KCPE exams.
I and my twin brother, we finished class 8, and my mother was to give me to be married off, and my brother was to go and look after so that we'll get school fees.
In Kisumu, a home verification visit of CISAC members is underway. Cabinet Secretary for Education, Professor George Magoha, leads the committee on a home verification visit. The team arrives at Vincent Odhiambo's home. Vincent lost his father in early childhood, leaving his mother, a tailor, struggling to make ends meet.
I was very active in maths and science. When I got the living scholarship, I was very glad.
For me, I'm seeing a star that is going to shine simply because of this scholarship.
It's another day for the Nyeri CSSB members who are making their way to various homes to ascertain that information given by students shortlisted for admission to the Wings to Fly program is indeed true. At Edward Njoroge's home in Ishagashiru in Tetu, Nyeri, they find the visually impaired mother. Edward is out looking for work to provide for his family. Moments later, Edward arrives to find the CSSB team conducting the verification of his neediness.
I like science because it is understandable very fast. I like English because it is enjoyable, and mathematics because I scored well.
Hussein Noor from Kuno village in Mbalambala sub-county in Garissa County is the only child in the family of 8 who has completed class 8. He is ready for high school, having sat the KCPE exams to get a remarkable 392 marks.
I heard about Wings to Fly when I was in class 7, and I was working hard to get that one.
Another verification visit is at the home of Valerie Ongachi in Ikunza village, Vihiga County. Valerie scored 362 marks in the KCPE exams despite the challenges she faced at home. She lost her father, the breadwinner of the family, in the year 2020. Valerie plans to use the opportunity provided by the Wings to Fly program to achieve her goal of becoming a surgeon.
I was called at my girls' vocally, and when I got the Wings to Fly scholarship, I felt very good because I knew they pay for me school fees, and me, I work hard to achieve my dreams.
These scholars are among thousands who attended inductions across the country. They were then commissioned in events where they received their letters of admission to Wings to Fly and Elimu scholarship programs. In Nakuru, 348 scholars were officially flagged off at Nakuru High School by the Nakuru Deputy Governor, Dr. Eric Korir, and Dr. James Mwangi.
Congratulations for making it to this great list. And actually, you need to demonstrate that you deserve to be there by doing well continuously as you progress in your high school.
At the commissioning in Kisumu, 131 received their letters of admission to the Wings to Fly and Elimu scholarship programs.
We are grateful to Equity Bank for the continuous support extended to the residents of Kisumu and many other counties across the country to provide the vulnerable students with an opportunity to further their studies.
As a county, we thank the Equity Group Foundation and our development partners for the kind of gesture that has given hope.
Kinshasa, the capital of the Democratic Republic of Congo, is a bustling city that is home to more than 17 million people. Situated on the southern banks of River Congo to the west of the country, this metropolis is the natural hub for trade among its 9 neighbors and outward to the west, south, north and eastern Africa. The Equity Group Holdings' entry to this vast country is a scale-up of its operations on a continent that is in urgent need for economic freedom through inter-country trade and economic cooperation.
As we witness our local enterprises coming together in the spirit of one Africa, one people. Our forefathers fought to secure not only political freedom, but also the economic freedom of our people. The political freedom is secure, economic liberation is therefore the task of our time.
Et nous pensons que le dynamisme qu'imprime aujourd'hui le secteur bancaire au Kenya va rejoindre notre secteur ici. Beaucoup de projets que nous sommes en train de mettre en œuvre dans notre système bancaire, que ce soit sur le plan réglementaire, que ce soit sur le plan de digitalisation. Donc nous sommes là en train de faire des essais sur la carte bancaire nationale qu'on a baptisée Mosolo. Mosolo signifie argent en lingala.
The model of an efficient, audacious, innovative, and technologically driven bank is clearly the key to expedited financial access in the region that falls astride the mighty Congo River and the Great Lakes region, symbolized by navigable water bodies, including Lake Victoria, the second largest lake on earth.
The Equity Group model is a homegrown model. It's developed from the insights and the inspiration of the African people. It speaks to their needs, it speaks to their culture, and it speaks to the way the society is organized. It's the most inclusive banking model on earth, allowing everybody to be onboarded, ensuring nobody is left behind. It's purpose-driven, and the purpose is the socio-economic transformation of the African continent.
Equity BCDC is now the second largest bank in DRC with a balance sheet of more than $3 billion,
and testimony of intra-Africa trade and cooperation. And on my part, I reaffirm the commitment of my administration to drive closer economic and social relations in both the region and across the continent.
With over 3,000 bank agents mainly in the urban centers and inaccessible, far-flung rural towns, Equity BCDC is set to scale up the number through the shared prosperity model and using mobile and online banking.
We are becoming one bank that cover all segments of the economy, that leave no one out. Talking about individuals, we talk about those micro, small, middle enterprise, which are generally underserved. Our objective is to maintain that segment above 60% of our lending business.
Equity BCDC is poised to embrace the vibrant micro, small and medium enterprises, the hospitality industry, mining and farming in many parts of the country.
Operating in the DRC as Equity BCDC, it gives us opportunity for cross-border trade to facilitate, for linking the Indian Ocean with the Atlantic Oceans. So we are in a very good position to support that. Having our site and the operations of the group, which has its operation in other countries.
In Kinshasa, a leading entrepreneur, Gervais Milondo, has ventured into the hospitality industry through investment in Lyon Hotel at the heart of the city.
C'est une joie d'avoir une banque comme Equity. Lyon a commencé avec 6 chambres et actuellement Lyon est arrivé à 108 chambres. C'est l'accompagnement d'Equity en permanence. Chaque fois que je suis dans le besoin, je peux appeler le manager directement et ils sont là pour accompagner.
With a bigger bank at his disposal, Gervais is looking to take a facility to establish a bigger hotel to meet the insatiable demand for accommodation in the city.
Equity a accompagné le business de Lyon jusqu'à faire un mall actuellement qu'on appelle Bisou Bisou Mall, un mall exotique où nous avons actuellement 200 locataires.
DRC is known for extraction industry, that is mining. It has many mineral deposits, one of which is copper.
We work quite a bit with the Equity Group in DRC and outside. We have had 3 years ago a project called Kisan for Mining, where we wanted to build a cobalt and a copper plant refinery, and we were quite tight on timeline as we needed to complete within 12 months and get the fundraising within 4 weeks in order to fetch the good price of the market. They offered us funding. Within 4 weeks the funding was disbursed and we were able to complete the project on time. I would say that without Equity Bank, that project would have not seen the light at the right time.
Extraction of copper involves an elaborate mix of dilute sulfuric acid to a sludge that is filtered to release the green liquid. It is from this liquid that copper is deposited on plates through electrolysis. The finished copper product is an unmistakable cargo seen on long-haul lorries to the Zambian border crossing port town of Kasumbalesa.
Equity BCDC has had a very powerful beginning because it's coming together of a heritage of 113 years that has been resilient, that has stood the test of time, and that has seen the development of this country for over 100 years.
Passenger vehicles packed to similar-sized carriers reveal the quantity and variety of traded goods for the MSMEs. The opportunity for transport prompted a Congolese entrepreneur, Patrick Moland, to invest in import and distribution of petroleum products sourced from Johannesburg, South Africa, more than 2,000 kilometers away.
Dans le secteur des produits pétroliers, à partir d'ici, de la ville où nous sommes de Lubumbashi, qui est la capitale du Grand Katanga, dans sa forme antérieure, nous avons 3 points d'approvisionnement des produits pétroliers. L'interaction que nous avons avec la BCDC, c'est une longue relation. Elle remonte de près de 18 ans aujourd'hui. Quand on a commencé, je pense que notre société avait 2 employés, 2, dont moi-même, plus un collaborateur. Aujourd'hui, nous sommes au-delà de 500 employés dans la société et nous avons grandi avec la BCDC.
DRC is endowed with fertile lands and sufficient rain for farming, especially to the east of the country. These eastern districts of DRC are the breadbasket of the country. Outward of Goma, situated near the border with Rwanda, are sources of bananas, maize, and an assortment of indigenous crops and coffee, mainly grown for exports. In Chea, a coffee cooperative is thriving. More than 11,000 farmers deliver their coffee to this factory for processing before it is shipped to the European market.
Hii kawa inatoka kuma sekta zetu za Supakdi za ziko 6 toka Kiluku, Utumba, Minova, Chea na Muhanga. Kawa inafika hapa kwangu, kwa mkono ya kwangu, naanza kuisaga. Tukishamaliza sugula, ndio wamama wako nyuma wanakuja nao kupita ndani kuchagua kidogo kidogo yenye inaharibika ndani.
Ukweli wakulima wamekwisha kuona umuhimu ya kahawa, kwa sababu hayo madini inapatikana sio kila mahali. Kahawa inatena nafasi kubwa kuzidia hiyo madini, hasa kwa hii ngambo ya Est.
Aime Nsimire looked for land with a permanent source of water for farming, but more importantly, to establish a water bottling plant. Although the Frame International Company operates around the clock, it only meets 2% of water demand in Goma.
Tunafurahi kabisa kuona president wa Kenya amekuja kufungua Equity BCDC kwenye Kinshasa, kwa sababu itatusaidia sote ambao tunakuwa wenye kufanya business. Kwa sababu tumetumika zaidi na Equity BCDC na itatusaidia pia kuboresha kazi zetu na zipande juu zaidi, na inakuwa vizuri pia, inaleta umoja kati ya nchi ya Kenya na nchi ya Kongo.
Equity BCDC will no doubt reach the large number of
Q3 investor briefing and release of financial results. Allow me to invite Reverend Jospat Gakuya to open for us with a word of prayer. Reverend.
Thank you, Alex. Please let us be upstanding for prayers. In the name of God the Father, the Son, and the Holy Spirit. Amen. Our Heavenly Father and Father of our Lord Jesus Christ, thank you for the promise that where there are 2 or 3 gathered in your name, you are in their midst. Lord, we want to welcome you in our midst this morning and for the rest of our lives. We want to thank you for the gift of life. Thank you for the gift of good health that you have blessed each one of us, O God. Our Heavenly Father, we ask of you that you may open our ears so that, Father, we may hear your voice. I pray that you may open our minds so that, Lord, we may hear your eternal wisdom. Lord, I pray that you may open our spirits so that we may receive your guidance. Lord, I pray that our hearts may receive your wonderful love. We want to thank you for our bank. Lord, from a humble beginning, today you are using this bank, Equity Bank, as a vessel of transforming lives and livelihoods for many people. Our Lord, we want to commit our plans to you. The Bible tells us in Proverbs 16 and verse 3 that we commit whatever we do to you, and Lord, you are going to establish our plans. We want to thank you for the clear vision and mission and a purpose that you have given us. This morning, Lord, we pray for our country, from east to west, from north to south, that, Lord, there shall be peace, that, Lord, there shall be prosperity, and that, Lord, our country will be healed from COVID-19 pandemic. And now, Lord, we want to commit this investor briefing ceremony to you, Lord, for every blessing. Hear our prayers. We pray all this in the name of God the Father, the Son, and the Holy Spirit. Amen. Thank you.
Thank you, Reverend Josephat Gakuya. It's now my pleasure to invite Dr. James Mwangi, the Equity Group Holdings PLC Managing Director and CEO, to release the Q3 results. Dr. Mwangi.
Thank you very much, Alex, and a warm good morning to everyone. We are glad that you have joined us today as we release the third quarter results for the 9 months to 30th September. We'll upload the investor briefing handbook, but allow me to just speak to a few slides as opposed to the entire booklet, so that we really focus on the critical issues. And the first one is our ethos, our beliefs, and our principles. They have become more important, more relevant than ever before. We have realized that the 2 years that we had to navigate COVID, whatever challenges arose, when critical decisions arose, we went back to our purpose, we went back to our values and ethos, and that has helped us to make decisions consistent with why we exist. Big decisions have been made, but we realized answers came because we held our philosophies to be our compass and our true north being the essence and the value system of the organization. So we still have found a better place. They have now been tested and tried during a very difficult period, and we had to make very challenging decisions. They were all guided by our beliefs, our essence, and our value system. The second thing we have found very critical is the governance structure. You may have values, you may have ethos, but the structure within which those decisions are being made is pertinent and has helped us to emerge out of this. So we have strengthened our governance structure, learned the lessons of how a powerful institutionalized governance structure can help decisions to be made consistently without emotions or people just asking for facts. And that governance structure has also allowed us to ensure whoever needed to be involved in decision making is involved. And again, we are strengthening our governance structures. In summary, the praise of our value systems, the praise of our culture, the praise of our blood has now become enshrined in our minds because we have had to experience all that during a very trying period. And what we have realized is because of going back to our campus, most of the decisions we have made have borne fruits and have made us to progress, but more importantly, to record lessons and insights of the praise of culture, the praise of blood, and the praise of the soft factors. It's good to have powerful systems. It's very powerful to have a big balance sheet, but we have realized their value is optimized when you put people first, when purpose comes first, and when values play their place, and you institutionalize them to become the drivers of the organization. We're emerging from COVID-19, so we feel that the country itself has almost bounced back and said, let's reopen the economy. Most of the COVID management policies, requirements have been withheld, and we are only left with the COVID management protocols at a personal level. And so we see this as an opportunity to say COVID is now normalized, and we have to adapt to a COVID environment going forward. And so the question is managing the bank in a COVID situation without using COVID any longer as an excuse to why things can be done, or why things have to be done in a particular way. COVID to us now has settled to the same level with the malaria, settled to the same level with all the other diseases. And so it's part and parcel of our lives. But let's look at what happened during the COVID period, the little year that we had COVID. The bank focused, because of the great decision made on growth. Our strategy was that of resilience. It was about being offensive and defensive. And from an offensive point of view, we can see what has happened in the last 2 years. Last year, this time, deposits had grown by 45%. Now that has been compounded by another 27%, lifting us from a 900 billion shillings balance sheet asset base to nearly 1.2 trillion. And we are glad that we have added almost 300 billion shillings to our asset base over that period. We've also seen, on the other hand, that the group have chosen to keep the rights of our economy on. They have chosen to support its customers, the private sector and the business. And we have seen for 2 consecutive years, we have maintained our normal growth rate, with last year loans growing by 30% and year to date by 23%. So quite a lot, yes. Deposits have grown much faster at 27. We haven't been able to match that with growth in loan book. We have grown loan book by 23%. And as a result, we have seen that the excess funds that have been generated by a faster liability growth rate than our ability to create loan book have been safely kept in government treasuries and government securities. So we could say we are warehousing that growth, led to unleash it to the business. And we'll see how the bank plans to deploy that additional 300 billion. So again, this year to date, 300 billion. Last year, 360 billion. So the balance sheet of the group has doubled from 600 billion to 1.2 trillion shillings within that COVID period. And we pay tribute to the great decisions that have been made to enable us achieve that. The bulk of this growth has come from our subsidiaries. We continued with our regional expansion. We felt that that is where the offensive strategy would play best. And we have seen some of the subsidiaries, like Uganda, growing its deposit by 47%, its asset base by 43%, and beaten by Equity BCDC in DRC, who have grown their deposits by 51%, their assets by 47%. And for the first time, we now see Kenya reduced to contributing only 58% of our total deposits, and the subsidiaries contributing 42%. This was an ambition that we had thought would take 5 years, but has taken just 2 years to achieve, where the contribution of the subsidiaries to the total deposit base of the group is more than 40%. Essentially, what we have done is to diversify our sovereign risks. Our sovereign risk is now distributed among or around the 6 countries. So there is no concentration, in the sense that we have learned lessons from South Sudan that, you can have a sovereign risk that really derail business. Now we see that the weight of the biggest contribution, Kenya, the sovereign risk to the entire group has been reduced to 58%. We see that it is not just a growth in deposits, but we have seen also the asset base is almost on the same basis, 60-40, where we expected to be in 5 years. We have delivered that in 2 years. We have seen revenue, it's 63-36, and we're increasingly seeing profit before tax is 76-24, showing that the subsidiaries are not just growing, but they are growing profitably and sustainably. And that has given us a huge confidence that the decisions we made earlier on. This has given us an investment portfolio return on equity of 24%. So we have in the past been debating about capital allocation, but now we are at the group level, a company listed, one slide back, Alex, a company listed in Kenya where cost of capital is 18, is returning a group return on equity of 24%. And so one could do projections as the subsidiaries mature, then they will be able to match the Kenyan subsidiary return at the group level, given that we are now 600 basis points above the cost of capital in our market where we are registered. We are delighted that those subsidiaries, when you look, it took Kenya about 16 years to reach a return of 4%. Alex, the next slide. But we are seeing that the others, we have Uganda taking 14 years. We have Rwanda taking 11 years. So increasingly, the subsidiaries are taking a shorter period to reach very high return of 4% return on assets. And that again has helped us a lot to see the possibility of what the regional growth. So we have now, because of the power we have seen of rapid growth by the subsidiaries, we have an entire group business that has a very high return and a very high growth rate. So we are now combining a high return and high growth in the group performance. We've also seen the ability and power of regional investment in the way we not only distribute the sovereign risk, but also the way we're able to diversify the risk of currency. As we can all see, we now have a currency mix of 43 to 53, meaning that translation risks, exchange risks can be balancing off within our books. So because 57% of the balance sheet is in local currencies and 43% of the balance sheet is in foreign currency. So any movement between the foreign currency and local currencies to a great extent is balancing off, because you have as much assets in foreign currency as you have in local currency. So any movement are neutralized, and the net effect is to a great extent is zero. And again, that really shield and mitigate the risk of volatility because of currency movement and translation risks. The second aspect we have noticed about the business is that it has continued to improve its quality of earnings. We see that non-funded income is growing faster than the funded income. Interest income for the group grew by 24%, when non-funded income grew by 29%. So essentially, non-funded, it's realized income. There is no anticipated provisions from the loan book because it has no underlying asset in the balance sheet. It's clean to the shareholders. There is no recourse to it, yet it's growing much faster than the loan book. But that again reflects the latent value that is in this balance sheet. And we saw it that, yes, deposits have grown much faster at 27 than loans at 23, meaning that as the group deploys the funding to high-yielding assets away from treasury bills, we'll see revenue significantly increase because of that allocation of balance sheet. So again, as hopefully the machinery of loans. And so you'll see the theme of the bank is where can we create a safer loan book? Where can we invest much? And that is where you see Polycarp, Group Chief Commercial Officer, is now changing sort of direction to ensure that as we deploy this massive, almost 300 billion that we can release from government securities to lending, it is going to be lent at a higher yielding asset base. So we're very excited that quality of returns, the quality of earnings is consistently improving. And total income has grown by 25%. And glad that during a COVID year, we have accelerated. Last year, our total income grew by 16%. Now it has accelerated to 25%. And we hope the weed of end of COVID, the opening of the economies, will now lift us even higher than 25% growth in income. Essentially, the income that we have talked about, the higher quality income, we have seen a significant portion of it come from Forex income. We've become much better in Forex trading. We've become much better in bond trading. We've become much better in treasury, in trade finance. So essentially, it's now services that the bank is offering that is growing faster, contributing faster growth in income than the balance sheet or on balance sheet assets in terms of loan. But I think the biggest thing we have seen during this period is the business transformation. We have seen this business completely transform from a fixed cost business model to a variable cost model. As we can see, branches and ATMs, what you could call the legacy branches, business, last year only did 30 million transactions, or year to September, only 30 million transactions. But when you look, we have 945 million transactions being done on devices owned by the customers, so it's our self-service, or on third-party infrastructure, meaning the business have moved from a fixed cost model to a variable cost model. And the journey of transformation of the business to a digital business is almost becoming complete. That doesn't mean branches are not useful. Branches have now become centers of excellence. They have become experiential centers, and they have become advisory and consultation centers for our SME and large customers. It's more of relationship management, while transactions have gone online. And the good thing is customers are managing their own accounts. The power that the branch manager used to enjoy of deciding when a customer gets service, what service they go, that has been shifted to the customer. The management of risk for the account has been managed to the customer. So the customer is managing their money. Essentially, we have also compressed time and distance. The customer can do banking whatever time, wherever they are. They are now connected online to the system. It's digital transactions. Goods and services are exchanging hands, and money is exchanging from one account to the other at the back end. But all that being driven by the customer. It's no longer where they needed the support of the bank manager or the bank staff. Customer has ultimately won the freedom of managing their own money. They have now got control of their money. And the ultimate convenience that one would ever wish is now with them, in the sense that they make decision whatever time, whenever they want, wherever they are. So that convenience is what the bank is offering now as a premium service. And truly, that unpriced service, given that the mobile transactions, we are not being charged, is being offered for free. You can imagine it's a convenience in reduction of cost and a convenience in terms of access. And we trust that this huge move that the bank has made will truly transform customer experience and hopefully position us as the first bank to have been able to make it. If I try to place that position in numbers, it means only 3% of transactions are now happening within our premises. 97% of the transactions are being initiated and being completed by customers outside our premises. That's how powerful this vehicle is. And to me, the loud statement is that Equity have now become a technology platform with financial licenses. We're just putting products on a platform and customers are consuming them. So essentially, we have become a big tech in the financial services. Big techs, most of them has not started making money, but as we shall see, Equity is a big tech that is able to make money. And essentially, we hope this will continue as we move on. It is not just the issue of number of transactions. We see the volume. I think slide 17, Alex. The volume in terms of value, the digital transactions now are doing as more value, 2 times more value than the physical branches. Although we said the branches have been left for the high value customers, the large customers, we realize that the large customers are doing less than half of the value of transactions. The bulk of the transactions are being done online. That speaks to 2 things. One, trust and confidence have been built on digital channels. Digital channels are no longer for small transactions. Digital channels are no longer for small money transfer or payments in the retail shop. They are now an accepted form of payment for business to business and for person to business, person to government, and vice versa. And we are very, very excited about it. But when you look at the individual channels, then when it then becomes quite apparent where the war has been won. And as we can see, the greatest adoption has been on digital payments. Our Pay with Equity, PWE, as it's now commonly known. We used to call it Easy Pay. We can see the number of transactions over the last 1 year have increased by 408%. And the value of those payment transactions have increased also by 392%. We also see that internet banking transactions have increased by 287%, and the value of internet transactions have grown by 404%. And every cloud has a silver lining. For us, the silver lining of COVID was acting as a tailwind to adoption of digital devices. It has transformed the way people consume financial transactions. It could have taken years for us to educate customers to move to digital platforms. But because of protocols like avoiding touching devices, public devices, working from home, avoiding public places, social distancing, the banking branch was not a very good place for compliance with those protocols. And as a result, for people to avoid and to comply, then they moved to the digital platforms. And now, essentially, what it has meant is COVID has transformed Equity Bank. There is never waste a good crisis. COVID turned out to be one of the best crises for Equity Bank, transforming ourselves completely. I guess me and you are thinking about what the cost-income ratio implication will be when all these transactions that had to be done at the branches with the support of bank staff
are now on self-service platform. The pace of growth that a bank can experience, again, can be seen. And so we are now seeing. The second and most significant one is businesses. Is corporate liquidity management internet, corporate internet. We have also seen the volume of transaction for corporate internet banking has gone up by 77. And lastly is the Easy app, launched last year and gone up by 82% and value on apps. We have always attributed the apps for young people. Again, this speaks to the brand now becoming accepted by the young, youthful population because it has offered them the devices that they would wish. But let me also look at the fixed cost channels. We see the number of transactions have not increased. They have remained branches 5%, ATMs 2%. But when you go look at the volume that has moved in branches and ATMs, the volume in the branches have gone up by 29%. The volume of transactions and value of transactions that have gone through the agents and Equitel has significantly gone up, with Equitel going up by 148%. To us, that means the economy is recovering. That growth means recovery, and people have moved back to business. And it's almost a business as usual, as Polycarp would always remind us. So essentially, we are seeing the bank becoming very strong in internet banking, in mobile banking, in app banking, and essentially becoming fully transformed. And we see that the branches, Alex 21, are now becoming less and less relevant to the customer in whichever form you see. In terms of value of transactions, the mobile is transacting 46% of the value of transactions, and we can see the agents. But most interesting is how people are moving to a cashless society. We have realized that 74% of our customers have chosen to do cashless transactions. And so, to a great extent, that is reflected by Pay with Equity, and we can see the jump, particularly between last quarter and this quarter. We see the number of transactions have increased by almost 400 billion shillings, value of transactions, just in one quarter, 400 billion transacted digitally without cash exchanging hands. So increasingly, the economy, the retail economy, is also becoming digitized. We're tending towards a cashless society. Economy is likely to be very, very efficient, and will keep on moving. And that's why the number of transactions on digital payments have gone up by 60%, while the value of those transactions have gone up by 123%. And that really reflects, the next slide, the proportions of cashless transactions. Third quarter last year, 52% of our transactions were cashless. That has gone all the way to 74%. As you can see, and the most affected seems to be the ATM. The ATM has really continued to lose. It has lost 50% of its transactions in just 1 year. So we're seeing, and that's why we are saying the economy is becoming less and less cashless. Agents used to be the bridges between digital cash and actual cash. When you needed the cash, you went to an agent. When you wanted to deposit cash, you went to an agent. As we can see, the number of transactions from agents have reduced from 28% of all transactions to 16 in 1 year. How rapid our society is transforming. How rapidly our people have been transformed by COVID. Occasionally, it takes a phenomenon to transform the way the world works. Our world has been transformed by COVID, the way it works. And truly, because we have realized the convenience, I truly believe we will never go back to the world of cash. We have moved on. And the question is, how quickly does a business transform itself? If you have a legacy system, you'll have real challenges. It's important that we see. And again, we can see the cards themselves, look at the transactions. They're also coming down. Agency is coming down. But we can see the mobile transactions. We can see the e-commerce. We have exposed our APIs. And in just 1 year, actually not 1 year, 9 months, e-commerce has processed transactions, 3 million transactions, and give us a revenue of almost $1 billion shillings. The world has moved, and the question is, how well are you positioned as moved? And we truly believe Equity is now very well positioned to provide solutions. We have also seen money transfer and remittances is no longer in brown envelopes. We can see how that has also grown, 22% digital remittances. And we can also see when it comes to Forex, we thought Forex you must go to buy physical from a bureau or from the bank, and we are seeing Forex transactions again moving significantly online. People also paying digitally. So that is the way we have seen. On the defense, all that is offensive. The bank has been very offensive, transforming itself, expanding and growing rapidly, increasing its market share, I believe, significantly. The second thing was to play a defensive role to defend itself. And I think I want to recognize our credit team. They have really done very well to ensure that we become sustainable and scalable by ensuring high-quality loan book. So we are really celebrating that from 10.4% NPLs last year as at September, we are down now to 8.9%. We have come from a high of 11.3% in the first quarter in March. From 11.3%, we are 8.9%, and we are very confident that the loan book will continue to improve. I once again want to refer to a very difficult decision was made in this bank, while regulators were recommending that a bank would not accommodate its customers for only 3 months. We said that was a business decision. We'll leave it only to the wisdom of the board. The board decided there is no global health pandemic that could be managed in 3 months. And it's in wisdom, it decided to accommodate our customers up to 3 years. We could give our customers breaks of repayment of principal plus interest for up to 3 years. We had computed that we would accommodate up to 45% of our customers. At the end of the day, only 32% of the customers exercised that right to be accommodated and their loans to be rescheduled or given a loan break. But as we saw the economy started coming back, And what has amazed us is that the customers started to pay as soon as they were able to pay. And as we can see, because of payment, what has happened is that the provisions we had set aside to take for them, the coverage has kept on increasing. So on a provision basis, our NPLs are now covered up to 91%. And when we add the credit guarantees that we had taken to protect the entire loan book, our coverage, NPL coverage, goes all the way to 104%. So it's not just quality, but also the protection of the loan book. The coverage of the loan book is very significant. I want to add here that the board, again, in its wisdom, decided we are not yet out of the woods. Let's not write back any provisions. And that is why, as the loan book improves, coverage continues to improve because we are not writing back provisions in the books. But we don't need to make any more additional provisions other than general provision for the growth to cover the growth of the loan book. So if we do a deep dive on the loan book itself, we see how the coverage is, the 104, how it is spread. Stage 3 NPL is covered up to 59%, or hold 59% of the portfolio with 31.8 billion. Stage 2 covered up to 16.6%, holding 13.3 billion, and stage 1 holding 0.9% provision of 4.1 billion. And that is the coverage that gives us total of those provisions give us a coverage of 91% in financial provisions and an additional 14% to bring us to 13% to give us a coverage of 103. We have given you a detailed analysis of how the provisions have kept on coming down. To date, out of the 171 billion that we had given, 104 billion have resumed performing. And when we look into the remaining book, we see bit of about 5 billion of that book is likely to struggle, and we have decided to recognize that book as part of our provisions of stage 3. We have downgraded that book. So in the current book as it stands, we don't see anything other than material changes in the environment that would increase the risk on the 171 billion. We have taken the maximum potential risk we foresee. We have downgraded those loans that have not commenced repayment and made full provision at stage 3, where we saw coverage is to the extent of 49%. All these measures of innovation, of efficiency, of offensive growth has resulted in significant improvement in our performance, particularly at the subsidiary level. The most impressive outcomes has been on cost-to-asset ratio. As you can see, most of the subsidiaries, if you look at cost-to-asset ratio, we have almost come halfway. Kenya, last year, it was at 7.6. Because of the offensive strategy of growth, as cost as a percentage of the size of our asset holding has come down to 3.7. Uganda from 9.2 to 6.4. Rwanda from 6.3 to 4.3. BCDC, DLC from 7.7 to 4.5, and South Sudan from 4.5 to 4. That to us is the signal that the entire balance sheet doesn't have a cost issue. It is more of a revenue issue that we expect to unlock as we deploy the assets that are coming from those offensive growth. And that is why cost-income ratio has improved, but we expect cost-income ratio to improve. We thought it would take us a little bit longer, about 5 years. It has taken us 3 years to get Kenya to come to a cost-income ratio below 40%. Rwanda, as we said, Rwanda has surprised us. In 11 years, it has become a high-performing. It has a cost-income ratio also of 39, and we see Uganda moving down from 57 to 51, and Tanzania from 74 to 64, and we expect that BCDC, as we complete integration, will also start the same trend. As a result, we have 3 subsidiaries, that is Equity Bank Kenya, Equity Bank Uganda, and Equity Bank Rwanda, almost becoming high return assets with a return on asset of about 4%, and consequently giving returns in excess of 25% on equity on individual basis. And we are happy that our largest subsidiary, Kenya, is having the highest returns and consequently able to lift the entire group. We're working very hard on the other subsidiaries, DRC, South Sudan, and Uganda, and we hope next year will be their year to show their performance. It's great financial performance, but Equity has realized it has 2 engines. It has an economic engine that is generating money, but it has a social engine. We believe in shared prosperity, that we can't forget the role and praise of host societies, host communities, and as a result, we treat host communities as key stakeholders in this bank. And that has given us a huge opportunity to invest in impact investment, shared prosperity model. And COVID allowed us to scale significantly. We now have 37,000 kids through under our secondary education scholarships. And as you can see, the biggest move in number of those kids has moved in the last 2 years. We have doubled the number of scholars from 18,000 to 37,000 by giving 10,000 and 11,000 in the last 2 consecutive years. That is because of the support of the World Bank through the Kenya government, who added significant impactors to our program. We have scaled our scholarships to university students. We now have 17,000 scholars who have been given support, university support, with the 688 being in global universities, and about 3,000 additional 3,000 who are in TVET institutions. So we scaled up to support community during a very trying time. We scaled with our partners, disbursement of cash transfers under the safety net programs. And we are, so far, we have reached 3.4 million households with 92.7 billion shillings in partnership with the government and international donor communities that are supporting the very poor and marginalized, with the largest being Inua Jamii by the Kenya government. To support young people and to make them able to tap into opportunities. We have trained 2.3 million women and youth in a 11-week financial literacy program to prepare them to be able to borrow and invest for themselves. We have reached out to 316,000 SMEs to support them during that trying period, and we have disbursed to 183,000 of them 111 billion shillings to keep the businesses alive, to help them to repurpose themselves, to help them to retool themselves, and to adjust to a COVID environment. But most significant have been agriculture, where we've been able to train another 2.2 million farmers, small-scale farmers, and help them to transform into agribusinesses, and reached also 170,000 medium-scaled farmers. So agriculture is central to us because almost 75% of the population are living from agriculture. But environment has become center of global conversations. There is an existential threat to humanity because of climate change. We have decided to provide leadership, and I'm glad over the last 2 years we have planted 7.1 million trees, and we are committed to continue with our 5-year plan of planting 35 million trees. But we are becoming increasingly more successful, not just by investing in environment, but more importantly, reducing the destruction of environment by financing clean energy devices. And I'm happy to say the last 2 years, we have financed 303,000 clean energy products and distributed them to move people from using wood fuel to using clean energy in the hope that will reduce the pressure on trees. But health remains a critical challenge. And I want to say our plan was muted, where the students, 17,000 students who we had sent to university, 1,800 had done medicine, and we decided to franchise a health model called Equity Afya, or Equity Health. And I'm glad to say, as at 30th September, 42 of those scholars that we had sent to university has opted to start clinics, and we have 46 active clinics, who by 30th September had seen 572,000 patients. So essentially our vision is to have 1,000 clinics, so that almost every village will have a health clinic, and we make health affordable, accessible, and of very high quality. So it's the issue of disrupting health, using the best of our students, got A grade, give them resources, put them in a franchise that we can monitor, that we can supervise, that we can set the practices, and that we can use the capability of the group, both in the blood and resources, to be able to transform health in this country. And I'm glad that this concept has become very attractive, and we have been funded by Propaco to pilot Equity Afya in DRC. So hopefully we'll be exporting our first 7 doctors to DRC to start Equity Afya in course before the end of the year. So that's really the strength. There are many lessons we have learned, but you can see the amount of money that we have spent in Equity Group Foundation. It's almost 60 billion Kenya shillings, or 513 million US dollars. That is what we call shared prosperity. We have returned 60 billion of our profits to society, of our revenue with partners to society to support society. So this is our investment. This is not like the social payments, as you can see, that stands alone. That is not counted in our investment in the programs because that's a pass-through. But we are excited that the return on this has been very, very significant. Equity, it's at an all-high in terms of brand value. The brand recognition has almost become an iconic brand. And we recently commissioned Harvard University to study this phenomenon and said what we have been able to achieve is brand love. In terms of social value, the brand is enjoying unprecedented love within the communities because of this investment. And the brand love has turned out then to be more of a huge asset that makes customers to stick with us, customers to be loyal, customers to pay their loans because of brand capital. And brand capital, social capital is very significant. It's as good as financial capital, or even higher. And that is why we said this bank is a creation of its beliefs and ethos. We believe in socio-economic transformation, created two engines. Little did we know that the social capital may be more valuable than the financial capital. With the lessons we have learned from this, with the lessons that we learned by the way we managed COVID, gave 1.7 billion shillings out there. We adopted 54 government referral hospitals. We have adopted 66 mission hospitals, a total of 116 hospitals. And we have supplied the government hospitals with the PPEs for the last 1.5 years. And we have managed to support both the government and the mission hospitals for another 1.5 years. The lessons we learned from that, the lessons we had in accommodating clients who held 171 billion of loans, trusting them, studying with them, saving their businesses, keeping the lights of the economy on, we realized we had power to do much more. And so the bank at the moment is committed to, and is launching or has just launched 500 billion or half a trillion shilling post-COVID recovery, resilient, and growth brand for the business sector or the private sector. This plan envisage that to help the businesses recover quickly and to grow and to remodel themselves, will give half a trillion shillings in loans. We hope we'll be able to reach 5 million SME businesses, and that the SME businesses, as they grow, each of them will create 5 direct jobs. That gives us 25 million jobs. And that will create another 5 indirect jobs because there will be market for raw materials. They will be having goods to distribute. They will have services to be provided to them. And in total, we hope we will have created 50 million jobs in 5 years. These jobs, this is a stimulus, but purely to the private sector because it's being offered by the private sector. And it's a form of loans. And what we are taking advantage of is the East African Community Protocol that allows free movement of goods and services. And we hope will promote significantly cross-border trade. And that explains why last week, but one, we hosted a South African business delegation By the end of this year, we are sending a couple of business people to South Africa. We believe South Africa can be able to provide our region with capital goods so that these loans are used to start manufacturing, agro-processing, so that we move to the next level. We don't just grow, but we move the next level. East Africa is doing very well with the services, but can do better in manufacturing. And we hope agro-processing will be the basis of our manufacturing. Manufacturing for construction material, whether it's tiles, pipes, cables, we hope that will be a huge transformation, and that the broken global supply chains will be replaced with local and regional supply chains using these $500 billion Kenya shillings in loans. This is an audacious goal. Never has ever Equity dreamt this big. But we are dreaming big because we are also big. Who could have seen Equity double its size during 2 years of COVID? So we said, we dared dream that during COVID we can adopt an offensive and a defensive strategy, and doubled. If that also happened to the businesses that we are giving $500 billion shillings, then this region will surely be transformed. So I want to persuade you to join us in believing, and you will not be alone. In terms of funding partners, we've managed to get $525 million from those partners there. Capital partners who are giving us tier 2, we have managed to get $300 million from those partners. For those who want to spend to build capacity in society, we've already got $445 million from those partners, and we have also got commitment for $170 million for risk guarantees, risk-sharing tools, so that we're able to protect our balance sheet. So these are the partners. We are not going alone. The biggest partner will be the UN agency. They have signed up. They want to utilize their 37 agents in each of the countries to support the social aging and ensure that they will use the Sustainable Development Goals platform to support the economic platform that will be supported by the financial partners. In the process, by funding manufacturing, by manufacturing trade, will then reduce the weight in real estate, which is worrying people, whether it's sustainable, and will create more opportunity. If real estate is not doing well, we'll divert the funds to where it could be doing well. So in a nutshell, that most likely will give us an opportunity to allocate the excess funds that we have stored in government securities to the private sector. If you look at the government stock is $360 billion. So that's just slightly over half of our contribution in terms of what we'll do. This is a revolving fund over 5 years. So if it revolves twice, we shall have given $1 trillion shillings under this massive development plan aimed at seeing East African region change. And hopefully, that will also change the balance sheet that we currently have. So Alex, if we move to the next page, this is a balance sheet that we have of 1.184, round it to 1.2 trillion. We hope the Marshall Plan will make it a 3 trillion balance sheet, because the growth will be, we are an aggregator. The 5 million businesses, if they doubled, if the SMEs doubled over 5 years, then ourselves will more than double because of the aggregating effect. At the moment, we have deposits of 875 billion, which have grown by 27%, driving the funding of the bank. As we can see, it's market funded, it's liability led. And then we have allocated that 23% in loans, and the surplus that needed time to be deployed, we have warehoused it in government securities. We are waiting the borrowing from the 5 million SME businesses, and can then be able to amplify this. We expect that this balance sheet will maintain or accelerate. But I think where we expect significant changes in the P&L, we expect non-funded income to even grow faster because we are focusing on cross-border trade. It's a regional growth plan, our goods move. Like at the end of this month, we are taking 200 Kenyans to DRC to explore, to see what we have seen. We have invited 1,000 Congolese to meet our 200, and any business opportunities that will arise there, we hope it will turn into trade finance, it turn into forex, and will accelerate this. We are supporting Kenyans who have chosen to invest in Ugandan oil to go and provide services. So we have seen the power of cross-trade, and maybe people have not fully appreciated the power of the African Continental Free Trade Area framework. We can't wait to see DRC join the East African community, because that will be a game changer. DRC exports minerals and natural resources and buys everything else. We hope it will be buying from East Africa. And that is what we want to facilitate, so that because it has suffered a lot with the broken global supply chains, we supply it with regional supply chains. So essentially that's the thinking, and we think while non-funded have grown by 29%, and interest income also at 29%, giving us a total income growing at 25% after netting of interest. The interest expense have grown slightly higher because of the long-term funds from development banks. As we saw, one slide back, Alex, as we saw, borrowed funds have grown to 104 billion shillings. Call it 105 billion from 70 billion, because we needed to lengthen the maturity of our funding portfolio to allow businesses to take long-term loans. We have taken that because of foreign currency, because we are financing exports, and exports are paid also in dollars, so there is no mismatch. But that has also had a significant impact on our cost of funding, which will now stabilize because the cost is there. What we will see is increase in interest income as we transform the treasury bonds into loans. Ratios seems to be doing well. We are comfortable with the capital ratios. The core to capital maybe have moved from 14.5 to 13.5, but that is because we are only taking 50% of the profit for the year. After the year-end audit, I will take 100% of the retained earnings, and that should be able to return the capital to the buffers that we operate with. Really, the biggest opportunity we have is the 60% liquidity, 59.5, and that is what has given us the firepower to dream big, to support business with half a trillion shillings. So it's not just numbers, it's where the money is, it's in liquid form, and we hope we'll be able to see more and more. So in a nutshell, that's how the results of the year look like up to 30th September. The results reflect, Alex, yeah, at the profit level, Alex. as an 85% growth in profit before tax, a 79% profit growth after tax, a 27% growth in total assets, and a 25% growth in total income. So the top lines of the bank, as we said, have reflected a great health. And it's not just profitability. What has impressed us most is we have come all the way from 11.8% NPLs to 8.9%. But that number becomes more significant when you take the Kenyan banking industry, as at August was at 13.8%. So we are 500 basis lower than the industry in quality of our loan book. Our loan book is 500 basis better than the industry loan book, and that gives us confidence that it's not just good performance, but high quality balance sheet, highly liquid balance sheet, and a significant balance sheet, because 1.2 trillion is 11% of the GDP of the Kenyan economy. That's how big the balance sheet is. It has the capability then to enjoy economies of scale, and we can only look forward to a better future. As I sit, I will ask Brent if there is anything you want to emphasize on.
Thank you, James. And maybe just to augment what James has said. So we're transitioning away from what was a very difficult operating environment where we had initially estimated that 45% of our loan book would have to be accommodated. This has reduced. This only peaked at 32% and is now sitting at 8% of our loan book. At the same time, the asset quality peaked at around 11.3%, and this has now reduced to the 8.9%. So we're moving away from what was a difficult environment to what is more a stabilizing and improving environment. During this period and over the last 4 to 5 years, the group has been reviewing and assessing its capabilities, capacity internally. You've heard over the past how we've enhanced the risk frameworks as we start positioning ourselves for stronger growth. In terms of this growth that we're seeing, and James has alluded to it, we have a lot of embedded value on the balance sheet with very high liquidity levels. This liquidity will be redirected to the private sector, and we are really focusing at key pillars to our strategy, namely around micro, small, medium enterprises. We will remain focused on those, and these will be the beneficiaries of the installed capacities that the likes of Kenya has invested in over the last few years. When you look at the standard gauge rail, the ports, what is being done at the border towns, connectivity from what is the hub for East and Central Africa, connecting it to the landlocked countries. And James has mentioned what we're doing around trade, what we're doing with over 200 Kenyan business people to the DRC. So micro, small, medium enterprises will remain a focus. A second part of what we're focusing on is around food and agriculture. You'll appreciate that a significant portion of economic activity, household activity, employment is in agriculture, and we believe our business is positioned to take those opportunities. A third focus is really around the value addition, leveraging off these productive capacities that have been installed, whether it's electricity generation, as I mentioned, the transport networks that have been built. Fourth is really, again, around trade. Across Africa, there's soft and hard infrastructure that has been put in place. And as Equity Group, because we operate across East and Central Africa, we are again well positioned to take advantage of this improving infrastructure that allows us to bring customers across the region and vice versa. And then lastly, one of the key considerations we have, and it's because it's embedded in our business model, is driving a social transformation aspect to our strategy. And ultimately, what the social engine James has referred to is it looks at building capacity in these value chains of MSMEs, manufacturers, trade. That social engine really builds capacities in those value chains. And you will appreciate in our social engine, we have pillars like the financial literacy, entrepreneurship training, which, for example, converts subsistence farmers, smallholder farmers into agro-businesses. These agro-businesses over time will move to small, medium, large, and the intention is to do more value addition. Ultimately, the success for us is to see the trade balance of a country like Kenya moving more, changing the mix from exporting primary goods to more value-added manufactured goods. And so, as James highlighted, we are looking at trading partners like South Africa that has very strong productive capacities, that have access to these capital goods. We are looking to catalyze trade so that we can get these capital goods into the country at more beneficial arrangements. So the group is really focused on these 5 key pillars to its strategic intent. And as James mentioned, we believe this will result in us lending to 5 million businesses that will in turn create 25 million direct jobs, and we believe also will create a further 25 indirect jobs. So the business is really well positioned for this stabilization and growth trajectory that we see taking place, at least in East and Central Africa. And again, East and Central Africa is one of the highest growth regions in the world if you look at the IMF World Bank forecasts for over the next 3 to 5 years. So we're going to leverage off these opportunities and how we positioned. And maybe just to highlight, the difficult decisions we made last year has allowed management to spend a little bit more time in the growth aspects. We made the decisions to really increase our coverage, support customers, and that is starting to bear fruit and also has given us comfort that we have left 2020 behind. So those are maybe just the additional comments I would make, James. Thank you.
Thank you very much, Brent. Those who may not know, Brent is our group strategy director and strategic partners relationship manager. I want to turn to our associate director in corporate reporting. Is there anything, Mary, you want to add?
No, I think the only additional thing I'd put is the numbers especially will really speak to management's ability to execute. You will see that we've been talking about this from March 2020, that we are going on an offensive and defensive strategy. We've been talking about as much as we will look at the risk, we will also grow in areas where that growth can be sustained. And it's not just that the strategy has been set, the numbers will tell you that this management, the ability of credit, of risk, of Polycarp's commercial to execute the strategy has been exceptional, especially in 2021. The top line growth of 25%, NFI growth of 29%, management being able to go into new areas of business like e-commerce, launching initiatives like Pay with Equity and do it so successfully and grow in 140, 300% in 9 months. That is exceptional ability to just execute what the strategy team really sit down and put forward. So that is the one thing the numbers will really tell you about. And credit being able to hold on to that COVID book, to hold on to our customers, work with them through the period that has been 2020 and 2021, the lockdowns, not just in Kenya, but the region. The region did experience slightly more severe lockdowns than Kenya did. and us being able to work with our customers, support them, and for us to be able to say that only 7% now remains under moratorium, and we have experienced a reduction in the NPL. That is really just a very busy management holding on to our customers and making sure that we are able to grow, yes, but grow very sustainably and grow very high quality.
Thank you very much, Mary. I think it's good that in God we trust. Everybody else put the data on the table. And what, if you looked at my presentation today, it is different from any you have seen in the recent past. We were doing an evaluation of the strategy. Was it as offensive as we had promised? Was it as defensive as we had promised? And the numbers now speak. It was as offensive as growing to doubling a balance sheet within 2 years. It was as defensive as lowering NPLs from 11.8 to 8.9, reducing the loan book under moratorium from 32% of the entire loan book to only 7% of the loan book. And it is as offensive as dreaming a Marshall Plan for East and Central Africa. That's how, and I'm glad, Mary, you have brought it out. Equity's greatest asset, it's in its people. They are believers, they are doers. And you can beat equity in thinking, but you can't beat equity in execution. So we don't claim monopoly of intelligence because that is given by God. But the desire to do is personal. And we are very enthusiastic and passionate in executing our plans. And equity is a creation of passion and enthusiasm to change lives, to give dignity, and to expand wealth creation opportunities for our people. Polycarp, anything?
Thank you very much, James. We were heartened, emboldened, and completely assured by how the market adopted our offensive strategy. Strategies get defined, they get curated, they get created. But where the rubber meets the road is when you deploy that strategy and execute it in front of the customer and in the marketplace. And the adoption of our offensive strategy and defensive strategy is reflected truly in the numbers by what is a solid growth in customer traffic on our channels, especially the mobile channel, the internet web channel, the branch channel, the third-party channels, and those numbers were presented by our Group Chief Executive Officer, and they are phenomenal. And when you grow customer traffic, not just from existing customers are doing a lot more with us. They're doing a lot more activity with us, and new customers are also coming on board. That speaks to relevance. Traffic does not just come, speaks to relevance, and it also speaks to the ability to execute and to create a platform that can attract, accommodate, and deliver for those customers. So the great improvement and continuous improvement in our IT platform and the improvement in our ability to disburse credit. In the last 3 months, you'll have seen a real accelerated disbursement of credit, and that is what speaks to the numbers that we presented today. So going forward, we remain very much in sync with market trends, and our offensive strategy has met a very warm market that is driven by encouraging macro factors. Kenya, in the past, we used to talk about a rural community and an urban community. Increasingly, this country is generally urbanized. The level of urbanization is unprecedented on the back of infrastructure, and with a youthful population of 19, we've also hit a sweet spot at a macro level of 50 million people who are young. 50 million people who are young speaks to a base of consumption. And we as business growth and development managers, because that's what we call ourselves, we go out and we speak to customers and curate solutions that deliver consumptions. And that is why Pay with Equity is salient to our strategy. Easy Pay, Easy Biz is salient to our strategy. The mobile channel is salient to our strategy. And we are very, very grateful that our strategy met a very ready market. And we are looking forward to continuing growing and defending our position as a lender, our position as a lead bank for transactions and relevance, and to also capture many more opportunities with a lot more innovations. And the biggest innovation, more than anything, to close my presentation, is to truly show how we have fused conscious capitalism in the bank with the social engine that focuses in making sure that we deliver shared prosperity with a commercial engine that has created real value by delivering real solutions that address real problems in the real economy. Thank you very much, James.
We're very lucky and privileged to have commercial people who believe in shared prosperity. And that explains why Equity is able to do. Commercial people tend to be capitalists who believe in only 1P, profit. We're lucky to have capitalists in commercial who believes in profit, planet, and people. And Polycarp, we can't thank you enough for the demonstration that your team has done in ensuring that we empower our people to build their communities back better. We ensure nobody is left behind, and that there is enough to go around if we believe in shared prosperity. Mary is our executive director in charge of leadership and governance. I want to invite Mary if there is anything in that scope. Mary, you can talk also about Equity's belief in gender balance. As you can see, I'm joined by 4 colleagues, 2 from each gender. I've come to realize that of the 11 people who report to me, 6 are female, and male are only 5. In the foundation of the 8 people who report to me as executive chairman, 5 are female, 3 are male. So, Mary, we thank you for your EQUIP program of equipping women with empowerment, inspiring them, and setting the pace for them.
Thank you, James. Maybe I just start on that note. I hope the men are not complaining, but I think we have done well. Last year, we announced the launch of EQUIP, our program for women. And the aim and the objective of this program is to just build our women's confidence to take up leadership, because the women have done very well at all levels. So what we want to do is to encourage them to aim high and reach for higher heights in terms of leadership. And we start by telling the women that it does not matter where you are, whether you are at the level of a cashier or a credit officer or a director, you are a leader in your own right, and you need to exercise the leadership that goes with your position. So leadership is not about position. It's really about your passion and the love for what you do, and the demonstrated capability that you can do what you do very well, because that is what gets you very, very far. We have already recorded very significant progress, as James has already alluded to, and we hope to continue, and the programs have started. We have already done 3 major projects under that, training on personal and professional branding. We have also done a self-awareness program for our ladies, and at the moment we are also doing, we have started a book club. We are leading the book, The Leader Without a Title, by Robin Sharma, just to take the lessons and see what some of these leaders who have been there before us can tell us, and we can pick some of those lessons and make ourselves better. Now, coming back to the business, I would say that we have really focused on, and we always pause executive as an executive management and ask ourselves, are we still aligned to the 4 key pillars that really make a successful business? And the first one is, of course, the strategy that we are pushing. And James has talked a lot about the business model and how we have been able to re-engineer that to remain relevant to our customers, especially post the pandemic. And that is why you can see it is trying to understand what does the market requires, because the second pillar is the market and our customers. We have segmented the market to understand in minute details what each of the segments requires in terms of products, in terms of services, what are their consumption habits, how do they want their products delivered, and there's a lot of focus on that, delivery, the delivery channels also. So we have done that. And then James also talked about the people, because that is the other key pillar. Our people passionate about what they are doing. Do they understand what the purpose of the institution is? Are they carrying the right values? Or love for the business, first of all, integrity, love for the customer, and all that. So we keep on just checking to see that we're on the right track. And then, of course, we cannot deliver without systems and processes. So, and you can see we have done a lot of systems reviews. We have added capability to the team just to make sure that we have the right team on board. Now, at the foundation of that is the governance platform, because for us that is the base that really gives us a very solid and sound foundation. Now, today we are joined by 10 directors and non-executive members of our various boards who have come for induction, because we'll keep on assessing also the competencies we have at the board, pulling in the right people, so that as we build the business and as we grow the business, we are also sure that we are resting on a very sound governance and leadership platform. And we will continue to do that on a day-to-day basis, so that we know that we are also anchored upon a strong governance foundation, because that is also a prerequisite for building a successful business. Finally, we cannot also forget the importance of risk. So for us, risk is also something that is always cutting across all that we are doing, and we have really increased the capacity in the risk management team. We have got the right systems and the IT technology to be able to help us, especially in view of the upcoming new risks that we have identified in the market. We know we have these days to think about cyber risk. We have to think about the AML and compliance risk. We now have the data protection issues that are coming up as the business evolves, you know, with the digitization and things going online, et cetera, et cetera. So we believe that we are well positioned, and we are going to do what we need to do on a day-to-day basis to ensure that the bank is well protected. So we really thank you for your patience. We really want to thank you for your support, because without you, we could not have got this far. Thank you, James.
Thank you very much, Mary, for reminding us that equity is not a story of numbers. It's a human story. Those numbers reflect lives of people, economic activities of people, and their dreams and aspirations, and our partnership with them. That is what those numbers remain. So every time, remember, this is a human story, an evolving human story of lives being changed, dignity being acquired by our people, and people realizing their dreams, and hence expanding opportunities for wealth creation. Let's close by asking Sam Gitwekere, our Group Chief Risk Officer, maybe to give, using the podium some, maybe a position where we are in terms of risk.
Thank you, James. Good morning, everyone. My name is Sam Gitakere, Group Chief Risk Officer. You have heard from James on the numbers, so I will not repeat the story on numbers, the NPL ratio that has improved significantly. But let me speak to the story behind the numbers. The risk function has been transformed significantly in the last year. We have a business, as you've heard, that is growing both financially and also transforming in the way it does business. You've seen the number of transactions that are taking place outside of branches. And beyond that, there is a lot happening in other spaces. The business is expanding geographically. So traditionally, the banks have managed financial risks, credit, capital, liquidity, market risk. But increasingly, what we are seeing is the emergence of very significant non-financial risks. We see IT and cybersecurity risk becoming a major area. We see fraud risk. We see operational risks increasing significantly. We see model risks emerging. So those are areas where the group has had to build significant capacity and continues to build significant capacity in order to position itself for its very ambitious targets and aspirations, as we've had in the past and we've had today. Let me touch on some of the changes that have taken place this year around those spaces. Within the credit team, we have developed a team, a function at the group level to support all subsidiaries. We've brought in people from across Africa and really across the world, some of the best people. Our group credit director, Emmanuel Macde, is a very experienced head of credit, having worked in Africa and outside of Africa, with Barclays initially, with Standard Chartered, moving on to Al Raji in Saudi Arabia. In each of these positions, each of these businesses being the head of credit risk for these organizations in West Africa, in Dubai, in Saudi Arabia, with different banks. He has been with Equity Group since last year as Group Director for Credit Risk. Working with Emmanuel Macde, we have Mike Sikazwe, who's our Director for Underwriting. Mike is with us here. If you don't mind, Mike, just thank you. Mike is Ghanaian. Mike also has experience across a number of geographies around the world. He's worked in Dubai, in the Middle East. He's worked across Africa and in the region. He is from Zambia, a very experienced credit resource. We have Abubakar Yusuf. Abubakar Yusuf is from West Africa, from Niger. He's ex-Citibank, but joined us from Ecobank in West Africa, where he was regional head for credit for the East Central and Southern Africa region. We also have Clement Dodo. We saw the results of the recovery efforts, dropping our NPLs very significantly, driven by Clement Dodo. Clement Dodo joined us from Ecobank Uganda, where he was managing director for Ecobank's franchise in Uganda, but he's now leading our credit recovery efforts across the group. Supporting Clement Dodo is Eric Silla, another seasoned turnaround and recovery expert, having worked in different organizations, including Barclays, Stanbic, and other organizations. So we have put in place a solid team at the center to drive credit risk, and they are helping deliver results, not just in Kenya, but across the group. And we have seen these results coming through in all of these subsidiaries. We've also been building a team around information and cybersecurity risk. We've brought in experts from around the world, really. We had joining us last week one of the top information and cybersecurity experts from around the world. She is South African, Thelma. She's not with us today. I don't think she's here. But she is a recognized leader in the information and cybersecurity space globally. She ranks in the top 50, top 100, top 3, depending on what metric you want to measure. So a real expert, recognized. And she joins us, joined last week actually, from MTN in South Africa, where she was the CISO, Chief Information Security Officer. Prior to that, she worked across a number of banks in Southern Africa as a CISO. And she sits in the first line of defense. So she designs our information security framework systems, puts it in place, but we have somebody else in the second line whose responsibility is to oversee what Thelma and the team, Thelma and Charles sitting right here, information security, what they are doing. Michael Kofi is our Chief Information Security Risk Officer, CISRO, as opposed to CISO. Michael Kofi joins Eda Thuo, who's been working in that space. Michael is Ghanaian. Prior to joining Equity, he was CISRO for Standard Chartered across West Africa and Southern Africa, covering all of Standard Chartered's operations in all of those areas. So another recognized expert, very strong individual, lots of experience in that space. The reason that we've been able to migrate a lot of transactions from branches into cyberspace, as it were, digital, is because we've put in place systems and people, increased our people capability, put in place additional processes. We have built models. The group has recruited some of the best data scientists to be found. And supporting these data scientists, we have developers working with the group, hundreds of them. And the demand for developers, as the team assembled here may appreciate, is significant around the world. So the fact that the group manages to attract hundreds of developers to support its initiatives and help deliver its strategy speaks to the brand of the group today. The ability to attract is a measure of the strength of the brand. So we have the best people being attracted, and not just developers. We are building model risk capability, people who will be able to check and ensure that these decision engines that are taking over what previously was done by human experts are functioning as expected, delivering the results that we expect, so that we do not run into any unanticipated or unexpected shocks, or a situation whereby the conditions that apply at a given point in time are different from those that were assumed at the time of developing models. So we have the best people coming in to support us on that. To support all of this and tie it together, the risk function is putting in place frameworks, enterprise risk frameworks, reviewing and enhancing those that we had, ensuring that the roles of the first, second, third line of defense are very clearly defined and understood across the group, ensuring the right risk culture pervades the entire group. The tone from the top and the tone across the group is consistent and speaks to this risk culture. Ensuring that the risk appetite is set in a collaborative manner and supports the strategy that the group has put in place for itself. So not constraining, but rather supporting and sustaining and ensuring that in spaces where we might be seen to be taking excessive risk, then acting as a safeguard to stop the group taking excessive risk. So functional. Also put in place very strong governance at all levels. In the last week, we've had board meetings across our subsidiaries and at group level. So very strong governance from the boards, but equally very strong governance at management level. And finally, ensuring that all of these policies, frameworks, and so on and so forth work. So tests to validate whether what we have set out in all of these documents and all of these frameworks actually work. A third line of defense to come behind and check everybody else. So in a nutshell, what I'm saying is that the group has expanded significantly, is achieving great results, is achieving huge transformation, but beneath the surface, there is a lot of work going on with risk, ensuring that all risks inherent in all of that change are being identified, material ones based on assessments undertaken, material risks are being mitigated to acceptable levels. And we are continuing the build out, so the expectation is we should continue to see the benefits of a very strong risk management as we go forward. Thank you, James.
Thank you very much. An organization can never be better than its people, and that is why we are investing substantially in people. The second thing is investing in our governance structure and our organizational culture. Great things happen where innovation intersects with the people with the right processes and governance structure. So we're really moving. I should, on Sam's behalf, also introduce Dion. Dion, maybe you could raise your hand. Dion has joined us from South Africa to come and help fight cyber and fraud, particularly fraud, social engineering. And we are very excited that after lobbying, the government of Kenya has formed an interministerial fraud fighting organ, which we want to provide it with the technical support so that Kenyans who are being engineered in the digital world, socially engineered, maybe we could really deal with that crime once and for all. It's very unfortunate where people lose a lot of money on their mobile phones because of being social engineered, and you can't protect somebody if it's somebody who they suspect is out to help them and only turns out to be a fraud, captures their pins because of social engagement. So we'll be able to do that, including using statistical models and data science, which Dion is very familiar with. Lastly, one of the things I was taught by elders is when you have something, protect it. We've decided to quickly build the IT. Once we have become the first company in Eastern Central Africa to hit 1 trillion shillings. We are now not just 1 trillion, it's 1 trillion 0.2. It's worth protecting jealously the wealth of 15 million customers across 6 countries. We are a systemic organization, and we can't afford whatsoever not to guarantee them from a perspective. That explains. The last thing that I would never want to be accused of is not tell you repeatedly that we are now a technology company, but with bank licenses. This could not have been possible without the support of my co-leader, a great friend, who 2 years ago, against all odds, chose to come and support and transform Equity. And I want to invite Lanley. He doesn't like speaking public, but today, Lanley, it's a great day for both of us. We didn't sleep. We are transforming the engine. I think it got ready at 11, and he has really changed the face of Equity in terms of system and people. I'll hand over to you, and you can introduce the CIOs. This is the only organization I understand has 13 CIOs. You know, a CIO says, I'm the Chief Information Officer of Equity, but there are 13 of them. So, and that explains to you how much we are investing in technology, just to be sure that the system will be available and accessible at all times, and it will be safe. Over to you, Rana.
Thank you very much, Dr. James. And like he has mentioned, we've been doing a lot around digitization, and you know, the result actually just shows around the non-funding income that we've had. Our systems, like we mentioned, they are 35 years old. So what we've been doing over the last 2 years is to move them into platforms that are that can be rendable in this time and age. And I've had support from the management and executive, and of course our board. They've been very supportive. We've had instances where we've had, you know, we've increased our stability greatly. We are now running around 98%. The plan is by the end of, by the first quarter of next year, we should be about 100%. We have a 60-day plan to get that rolling. Our customers will be delighted at some of the new products that we are launching. And to help us, you know, we've tried this for 2 years and a few months, but we realized that we needed help, and we've been able to get some help. So if you're just joining as the CIO, can you please stand up while I try and introduce you one after the other? So what we've also done is to be able to make the subsidiaries to be autonomous. So we've been able to get somebody to manage the subsidiaries, a director who came in from Airtel, Bavo. So Bavo joined us from Airtel. He's a group IT director from Airtel. He's Tanzania by national, and he's been very helpful, supporting Mary since he joined the bank. We also have Dennis, Jimmy. Jimmy helps us with our process efficiency, because Jimmy still keep standing while I talk about you. So while Jimmy helps us with our process improvement, no matter what we do in the front end, if the back is not well, you know, automated, we'll run into trouble. So Jimmy is playing with things like robotic processing, so that we can do our reconciliation and other management using robotic. Jimmy came from Stanbic, South Africa. He's a Kenyan, but he's been in South Africa for 17 years. He joined us sometime last year, and it's been phenomenal since he joined. Then we have Godfrey. Godfrey worked very well with Jimmy. Godfrey has 36 years plus experience, 30 years plus experience. He's worked with EcoBank, Family Bank, and ABSA, worked around the globe, and fortunate to have met him. He's now working as a digital operation director, helping us to make sure that the back, you know, is well, and he's helping us to coach and mentor the operations department in the branches. Thank you very much, Godfrey. Then we have John Wamae. I'm surprised John was still able to make it this morning. John was awake all night trying to make sure that the system is running for our customers. John Wamae is a IT operations head. He's the one that makes sure that nothing goes wrong. He's the one that makes sure that we are very stable, and he's been doing a very good job. Beside John is Charles. I think Sam did mention a little bit about what Sam is doing. Charles is the head of IT security. What Charles has been able to do is that in the last 2 years, you might not notice that the fraud and cyber attempt in Kenya is one of the largest in the whole of Africa, right? You know, I may say even larger than that in Nigeria. And so what Charles has been able to do has been able to help us to fortify our security so that our money is safe and our information is also safe. Thank you very much, sir, for a very wonderful job. We also have in the house Theo. Theo Muyiwa was the CIO in First Bank in Nigeria, one of the largest first-tier bank. He joined us about 2 months ago. Theo and I worked in Diamond Bank, where I was the head of IT for the group head of IT. Theo was there as the head of operations. He supported us very well there, and I felt he would do the same thing here. So Theo joined us with years of experience in IT leadership and IT experience. Now, some of them, thanks Theo. A couple of my colleagues are not here. Sam mentioned Thelma. Thelma joined us from South Africa. We also have Marshall. Marshall joined us after 21 years in Accenture. He's Kenyan, worked most of his life in the US, but he's now with us. We also have Lalusha. Lalusha is Zambia, and he works with APSA in Zambia, and he's joined us in the last 6 months. So basically, we have about 13 CIOs. The other thing that we didn't mention is that we set up a company, because with all these CIOs, we need to develop a lot of solutions. And we have Janet, who joined us from Andela. And then, oh, Janet is there. Thank you very much, Janet. You can remain standing while I do a little bit of introduction. Janet joined us from Andela. If you know, Andela is a US company that just became a unicorn. And Janet was the head of Andela for Kenya. And we felt we needed to get somebody to help us with that developers. And we're lucky to have Janet. And since he joined us, he's recruited about 300 developers from 15 different countries across the world. Thank you very much, Janet. And we also have Victor Adewusi. Victor is actually in South Africa. He worked with Stanbic. He was the chief data officer for Stanbic in South Africa, and he joined us last year. What he's been able to help us do is, with the help of Elizabeth and Mary over there, they've been able to build a world-class scoring engine that can help us give credit to our customers without them coming to the branches from the tip of their fingers. And they've also built a fraud management solution to help us trap fraud. So those are some of the things we're doing. They are very exciting time ahead. I may dare to say we are no longer a bank, like my CEO mentioned. We are a fintech organization, and that's why we have 13 CIOs, and we are still recruiting. Thank you very much for your time.
A failure on my side if I didn't tell you that equity has transformed. It's not the usual equity. Even myself, I'm still navigating because it's a technology platform. But with all these licenses, and part of our addition to the platform is insurance. Allow me to introduce our first managing director of Equity Life Insurance. Ajara, maybe you may want to take the podium for the first time and tell us when we shall have insurance on the platform. As you can see, the innovation company, MD is already, insurance is already. We need to be helped here. Equip needs to focus now more on the men.
Good morning, everybody, and thank you very much, Dr. James. I think I'm delighted as part of the equity company to basically represent the Protect pillar. Those of you who know the equity story know that we are basically looking to move money, borrow, save and invest, and then protect. So this year, I'm still confident it's this year, we're going to be coming to the market with insurance solutions. And really, our aim is to ensure that we come through a platform of an insurtech. As everybody has spoken today, Equity is a technology company offering financial services using various licenses. So we are a tech fin. And what we're going to be doing on the insurance side is be the first ever fully fledged insurtech to ensure that our consumers from end to end can purchase, interact, consume, self-service, and actually do claims through a digital platform. Thank you.
Thank you very much, Ajara. As we said, we have created 1.2 trillion of customers' assets. We need to protect those assets. And that's why insurance becomes relevant. You don't help customers to create wealth without helping them to protect wealth. And that's why. Lastly, just before we take questions, let me ask Mary. It's a very special day when we are joined by 10 directors who have come for a week induction program. Maybe, Mary, you could introduce them. Just start and, yeah, thanks.
Thank you. As James has said, we have 10 new directors who have joined us for induction. Our induction for the board members takes 1 week, actually 6 full days. and that is because we would like them to really understand the group very well, the business model, our strategic pillars, our strategy going forward, because we all understand that the role of the board is for them to ask us as management the tough questions. Are you still on course? Are you still following the right strategy? Why this and not this? So we are glad to be joined today by the following directors, and kindly, if you could just stand up so that the others can see you. We start with Mr. Jonas Mushosho, who is our new member for the Equity Group Holdings PLC board. That's the group board. We have Dr. Gideon Maina, who has joined us for Equity Bank Kenya Limited board. Welcome. We have Mr. Joshua Njiro, who has joined us for the Equity Life Company, which has just been started now, full insurance. We have Dr. Eva Jenga, who has kindly joined us for Equity Life Insurance also. We have Professor Agnes Wausi, who has also joined us for Equity Life Insurance. Those three will be working together with the MD, Angela, who has just spoken, to really set up the business and ensure that the strategy is right for the market. We have Dr. Agre Mulimuka, Equity Bank Tanzania Limited. Karibu, Dr. Agre. We have Ms. Anita Umuhire, that's for Equity Bank Rwanda, our subsidiary in Rwanda, together with Ms. Belinda Buiza, also for Equity Bank Rwanda Limited. Welcome. We have Mr. Lambert Kadala. Mr. Lambert has joined us for Equity BCDC, our subsidiary in DRC, the Democratic Republic of Congo. Karibu. I was trying to remember the French term for welcome, and I couldn't. I'm sorry. Welcome, Mr. Kandala, to Equity. Finally, we have Mr. George Theobald. Unfortunately, he's not in the meeting today, who has come in to join, together with Dr. Agri, the board in Equity Bank Tanzania. We welcome you, directors, to Equity. Thank you, James.
Thank you very much, Mary. And I think the last subject is if there is any question, the people in front have mics. There is one at the far end there. We can take a couple of questions.
Kinshasa, the capital of the Democratic Republic of Congo, is a bustling city that is home to more than 17 million people. Situated on the southern banks of River Congo to the west of the country, this metropolis is the natural hub for trade among its 9 neighbors and outward to the west, south, north and eastern Africa. The Equity Group Holdings entry to this vast country is a scale-up of its operations on a continent that is in urgent need for economic freedom through inter-country trade and economic cooperation.
As we witness our local enterprises coming together in the spirit of one Africa, one people. Our forefathers fought to secure not only political freedom, but also the economic freedom of our people. The political freedom is secure, economic liberation is therefore the task of our time.
Et nous pensons que le dynamisme qu'imprime aujourd'hui le secteur bancaire au Kenya va rejoindre notre secteur ici. Beaucoup de projets que nous sommes en train de mettre en œuvre dans notre système bancaire, que ce soit sur le plan réglementaire, que ce soit sur le plan de digitalisation. Donc nous sommes là en train de faire des essais sur la carte bancaire nationale qu'on a baptisée Mosolo. Mosolo signifie argent en lingala.
The model of an efficient, audacious, innovative, and technologically driven bank is clearly the key to expedited financial access in the region that falls astride the mighty Congo River and the Great Lakes region, symbolized by navigable water bodies, including Lake Victoria, the second largest lake on earth.
The Equity Group model is a homegrown model. It's developed from the insights and the inspiration of the African people. It speaks to their needs, it speaks to their culture, and it speaks to the way the society is organized. It's the most inclusive banking model on earth, allowing everybody to be onboarded, ensuring nobody is left behind. It's purpose-driven, and the purpose is the socio-economic transformation of the African continent.
Equity BCDC is now the second largest bank in DRC with a balance sheet of more than $3 billion, which is equivalent to 300 billion shillings.
Today is a clear reminder and testimony of intra-Africa trade and cooperation. And on my part, I reaffirm the commitment of my administration to drive closer economic and social relations in both the region and across the continent.
With over 3,000 bank agents, mainly in the urban centers and inaccessible, far-flung rural towns, Equity BCDC is set to scale up the number through the shared prosperity model and using mobile and online banking.
We are becoming one bank that covers all segments of the economy, that leave no one out. Talking about individuals, we talk about those micro, small, middle enterprise, which are generally underserved. Our objective is to maintain that segment above 60% of our lending business.
Equity BCDC is poised to embrace the vibrant micro, small and medium enterprises, the hospitality industry, mining and farming in many parts of the country.
Operating in the DRC as Equity BCDC, it gives us opportunity for cross-border trade to facilitate, for linking the Indian Ocean with the Atlantic Oceans. So we are in a very good position to support that. Having our site and the operations of the group, which has its operation in other countries.
In Kinshasa, a leading entrepreneur, Gervais Milondo, has ventured into the hospitality industry through investment in Lyon Hotel at the heart of the city.
C'est une joie d'avoir une banque comme Equity. Lyon a commencé avec 6 chambres et actuellement Lyon est arrivé à 108 chambres. C'est l'accompagnement d'Equity en permanence. Chaque fois que je suis dans le besoin, je peux appeler le manager directement et ils sont là pour accompagner.
With a bigger bank at his disposal, Gervais is looking to take a facility to establish a bigger hotel to meet the insatiable demand for accommodation in the city.
Equity a accompagné le business de Lyon jusqu'à faire un mall, actuellement qu'on appelle Bisou Bisou Mall, un mall exotique où nous avons actuellement 200 locataires.
DRC is known for extraction industry, that is mining. It has many mineral deposits, one of which is copper.
We work quite a bit with the Equity Group in DRC and outside. We have had 3 years ago a project called Kisan for Mining, where we wanted to build a cobalt and a copper plant refinery, and we were quite tight on timeline as we needed to complete within 12 months and get the fundraising within 4 weeks in order to fetch the good price of the market. They offered us funding. Within 4 weeks, the funding was disbursed, and we were able to complete the project on time. I would say that without Equity Bank, that project would have not seen the light at the right time.
Extraction of...
Now, you can always be sure it's Equity calling. When we call you, we will use only this number, 0763 000 000. Always be sure it is Equity calling.